first. There will be some small amount of change, transformation, and change in technology. The security handling mechanism of how a central bank can issue a digital currency, how secure it would be, and how can it be protected, those aspects needs to be handled. But again, central bank today issue cash, and they are protected in the same way as a digital currency will be protected. But the protection mechanism will be a little different. The ability of any place where an economy there is a run on money, and how do you protect against run on money? That needs to be thought through from a policy statement and how it's handled. Then it's not a question of issuing a central bank issuing a digital currency. It has to transcend the borders. It has to have an applicability that, from a trade perspective, it allows countries to trade with each other. It allows countries to settle with each other. And that's where many of the networks that are already there can be used. The biggest challenge today for any digital currency and use of digital currency, we talked about remittance and other things from a technology perspective, is the last mile. The last mile where the actual currency needs to be converted today in cash, that is a challenge almost everywhere in any kind of payment system. But when you have a digital currency backed by a central bank, you can eliminate that last mile where settlement happens between point to point instead of settling between different hops through which the money goes. The other technical advantage that you get from this is that you speed up the transaction, you create more efficiencies, and at the same time, from a central bank's perspective, you ensure that the value that is exchanged by means of currency exchange, that value remains as what it was intended to be to exchange. And take example of remittance. If I want to transfer $100 from US to Philippines, I get to transfer maybe $85 or $90. The $10 value goes away in the rest of the. It supports other parts of the economy, but to an individual, that's not what, from a purpose of value, that's not what is maintained at that level. So I will again reemphasize, technology-wise, there is technology. There are series of platforms provided. We in IBM also have our own platform that we are just launching in a beta phase. It's called IBM WorldWire, which is a 6th payment rail supporting cross-border payment and issuance of digital coins on that, digital stable coins on that platform. And it has already nodes in 36 countries, and we will be doing soon a limited pilot with some money transfer operators as well as a bank that will come into the payment rail to issue a stable coin to create liquidity in the network. So any central bank, from a technology perspective, it comes back to the policy question that how do you, first of all, issue, how much will you be issuing, how you will securing it, and how will you create liquidity around the issuance that can be treated and traded universally by everybody participating in the economy. So that's it.
Very good. I was just wondering, with your many conversations around the world, and I know you spend nearly half your time on a plane going from different cities to see regulators and central banks, but also commercial banks as well. I mean, what are the main issues they ask you about this technology when you're talking about the opportunities it could provide as well?
Frankly speaking, to me, it is more about the awareness and understanding of how this will fold out in the market, right? We have some very advanced conversations with regulators. I would say there is a little bit of conservatism in the approach because it's a wait and watch kind of an approach to see how this thing pans out. But at the same time, different aspects of the economy in these countries are increasingly getting shifted to a digital world. And sooner than later, it's a right time for central banks to then start thinking about how they can maintain their monetary sovereignty, about how they manage this whole adoption of digital world and digital currencies. It's inevitable. It will happen, and it will change the world.
Okay, great. Thank you very much. Now we are getting towards the end of the panel. I have some questions, but I also wanted to open the floor to some questions. Okay, I have a number. If you'd just like to introduce yourself and which institution you're from as well. I will start with the gentleman here, and then we'll work our way around the room, please.
Thank you for the excellent presentations from all of the panelists. And probably to Philip and to our friend from Fiji. With a digitalized currency, can we avoid devaluation, like what happened in Venezuela?
Sorry, what was your
Can we
question
avoid inflation, is it? Oh, devaluation, sorry. Devaluation, as in Venezuela. Was it? Who wants to try
So
that?
let me take one simple view of digital currency is no different than a fiat currency being issued, right? So think about that. The advantage that digital currency provides, in a simple term, if a country issues $100 million of physical cash, and tomorrow they issue $100 million of digital currency, the difference is that the $100 million physical cash that is injected into the economy in 2, 3, 4 year time frame and maintaining that the same 100 million is working in the economy, you are not sure if the value in the economy is still related to that $100 million. There could be black money, there could be counterfeits, there could be so many things going on in there. So when the entire population then makes a run on that 100 million and everybody has a notional value, you may not have 100 million money to actually give back and guarantee that. That's where devaluation and all those things happen. Whereas I think in digital currency world, if you issue that, the transparency of digital currency increases phenomenally. You are able to track the transaction. You are right to the exact single currency and tokens and securitization that you do on those tokens, as well as the complete transparency of it. Apart from that, if your currency is influenced by the productivity level of your country, GDP growth, other kinds of economic sufferings or other kinds of economic challenges face, the devaluation of the currency as you try to convert with any other country's currency will go the same principle as you go with the fiat currency.
Phil, I just wanted to see if you had some comments on that. I mean, obviously, there's a lot of benefits from the possibilities of moving away from the dollar and its dependence, but also, does issuing a central bank digital currency, is it almost a panacea to all the issues that these economies face in terms of devaluation and things? Or, does it really add to the central banker's toolbox?
It does. I think you come back, and I think Saket's put it very well, is you come back to the basics of currency issuing. A currency, whether it is in paper form, electronic form, or something else, is only as good as, if you like, the government that stands behind it. And essentially, what that is the government's ability on a regular basis to take tax from its citizens. So Saket, I think, is absolutely right that thinking that something based around blockchain solves all your other problems, no, it doesn't. It actually compounds them.
Oh, you're right. There's a lot of fundamentals. Regardless if it's central bank digital currencies or marbles, there's got to be trust in the underlying system, hasn't there? So I know there was a question at the back of the room, there, gentleman there.
Hi, my name is Adnan. I'm from ADB. Just a question around the cashless society, and how would you look at the black economies, and without the documentation of these economies, do you think that these cashless percentage can increase going forward?
I think Oy should take this one as a central banker. I mean, you said that Bank of Thailand was obviously looking at wholesale rather than retail, but this idea about traceability is, of course, a big value add to retail currencies. So how's the BOT looking at this? Yeah.
Thank you for the question. I think the most important part is about the service providers need to know the customers who they're serving for. So basically, the KYC and CDD process is very important. But this is happening online. This is happening electronically, right? So a lot of central banks or even government entities encourage the rising of the eKYC. To have the identification, verification parts that can be done online. So I think for the black market, as long as it's under the similar umbrella of the regulatory framework that we are doing with the fiat currency, together with the electronic channel controls over the eKYC part, that will probably eliminate some of the concerns from the black market, as long as you understand and know who is transacting the financial transactions. At the same time, data or information that is flowing in the system should be more transparent. That will come to the challenge on the policy issue, how well the regulators will leverage on that data, and to understand the economic movement, to know what's going on, to do the AML-CFT process better. So I think that would be really challenging for us, and we need the right tools to facilitate that, talking about big data or data analytics part, and that's like really quite far from what we are really, have the skills with as being a regulator. That's why what Philip mentioned about the private and public collaboration and partnership that can happen on that space as well.
In theory, of course, unless you replace cash with a digital bearer instrument, so if you move your digital currency is account-based, you, in theory, abolish large swathes of the black economy. It becomes impossible to engage in a black transaction because every transaction is recorded and is identifiable because it's linked to an account. It goes, the digital money goes from one identified account to another identified account, and the authorities using AI techniques can, in real time, ask the question, has tax been paid on this transaction? Or should tax be paid on that, on this transaction?
Let me also share a very interesting...
Sorry, can I just say, there's a broader policy question, of course. Do you want to abolish the black economy? Because in many countries, the black economy has a very important social, historical, cultural role. In Italy, in Italy, a highly developed economy, it's 15% of the economy. If you tried to abolish the black economy in Italy, you'd probably have a revolution. It's not necessarily the case that a government would set out to abolish the black economy.
No, Philip, I agree with you. Same thing in Greece, for example, right? But I will share a very interesting perspective. I come from India, and many of you know about the demonetization, right, in that happened in India, just to eliminate all this black market or parallel economy, which was 3 times the GDP happening in parallel economy. People had no idea, or government had no idea how much is real money and how much is float that is around the real money. So when the demonetization happened, that just sucked up the extra fluff around the net economic value of the currency that was there, and government is forcing people to go through electronic route. But what is going into the electronic route is the value or notional value that is being put together. Of course, there is some transparency in there, but people are smart. They are taking the additional fluff and notional value that they have, converting it in gold. So you store the additional black money that you have in gold form, and you can avoid the electronification of the currency itself. Now the government has gone ahead and said that, okay, now we have an amnesty scheme. You declare your gold, pay the taxes, and you're good. But people will always find some way and find way of hiding money and not paying the taxes. I mean, that's unavoidable. That's basic to human nature. That's how civilizations have progressed. But generally speaking, if we really think of a world where everything is issued on a digital currency and slowly that becomes the norm, then definitely you will be able, or a government will be able to control these black economy in a much better way.
Thank you very much, Sakya. Any more questions from the floor? Yeah, please, gentleman at the front.
Sanjar Nasir, Central Bank of Uzbekistan. For now, banks are somehow digitizing cash to digital money, and if central bank issues digital money, what will be the role of central bank? Will it act as commercial bank, or monetary policy maker? And second question is on monetary policy perspective, will it be as traditional issuing money, or is it like deposit operations of central bank? Thank you.
Sorry, did I hear you from the Central Bank of Kyrgyzstan? Was it? Uzbekistan, sorry. Okay, very good. So Phil is very good on these abstract questions.
Yes.
Are central banks doing themselves out of business?
Well, the answer is it depends on how far the central bank. The short answer is no. The central bank is entering into new businesses, and one of the problems for central bank digital currency is it means central banks have to enter into the retail banking business, and most central bankers I speak to are horrified by the thought of it. There are all kinds of aspects of retail banking that just don't sit very well with central bankers, which is where you get into this public-private partnership piece. So if as a central bank I were operating a system of accounts where citizens have the option but not the obligation to have an account with me, I could conceivably outsource the running of that on an operational basis to a consortium of banks, a consortium of telecoms companies, to IBM, to a grocery chain, set of stores, or what have you. There are many ways of doing it. You then, of course, run the question, if I am a citizen, particularly at the current time at a zero-bound interest environment, why on earth would I want to put my money with a privately owned bank if the central bank is willing to offer me an account? I can conceive in an environment where we return to normal interest rates, let's say a 5-6% interest rate, and the central bank is offering me an account at zero, and Bank ABC, privately owned, is offering me 5%. I've got a trade-off, and particularly if the central bank at the same time is also maintaining a deposit guarantee scheme that says I can have $100,000 unilaterally guaranteed by the state, I've then got a bit of a trade-off. At the current time, with interest rates as near zero as makes no difference, I think I'll put all my money with the central bank, thank you very much. So you then get the issue about the central bank, by getting into the current account business, puts the rest of its domestic banking system out of business. Discuss. Oi, what do you think?
Yeah, I totally agree with you, but there are different models that can be done as well. As I discussed with you about like two-tier model, that we could have banks to be the distributor or the wholesaler for those CBDCs, whatever, and retail customers can have their accounts at commercial banks as usual. And we have only, because we are the regulator of the banks, we are bank of the banks. So we don't have to hold the individual accounts as what we are doing right now. So there are different models that have been discussed. And the most important part is trust. No matter who keep the money, as long as you can provide trust to your customer. For instance, talking about electronic money that the currently banks and non-banks can issue. So that's not much different from CBDC, because especially in Thailand, we have the regulation on the e-money, service providers that have to hold their 100% float money in savings. So the providers can't really do anything with those deposits because the non-banks are not interpreted as the deposit taker as opposed to banks. So On the contrary, when we're talking about central banks have the individual's account, now it comes to the policy issue, what we're gonna make the profit from that, or build the economy from those deposits, which is different from what commercial banks are doing. Then probably in a very long period of time, might be when even after I retire, that the central bank will actually hold the retail, accounts ourselves. That's for my personal view.
Well, I think as well, I think by the time you're governor of the Bank of Thailand, the banking system as we know it will have changed fundamentally. And I think we have to look at digital currency from that focus, that we are, I believe, are going to see over the next 10 years a fundamental change in banking as we know it. And I think there will be fewer banks, they will be doing different things, and there will be a host of other companies involved in financial services one way or the other, and an awful lot of them will have accounts with the central bank. So I think the central bank will be sitting at the center of a very different spider's web than it does today.
Sakya, I mean, IBM, you are a technology company, so you are futurologists in some sort of way, and you have to, I mean, how do you see this trend developing as well?
Yeah, I fundamentally think, the role of central bank need not change. They can still be the same role, and, you can still continue to provide their fiduciary responsibility of making sure that the monetary sovereignty and the amount of cash that is being issued, that's controlled, traced, and tracked, and partner with commercial banks or even large corporates or private enterprises to say that if you want to issue digital currency, here is the mechanics of how a digital currency will be issued. It's same as your fiat currency, and this is how the infrastructure is set up to govern that, to monitor that, and to issue that. I'm in fact talking to a central bank right now as we speak to put together a framework and model through which the central banks will play a central role in defining the policies around which any private company and their treasury can raise or create digital currency in lieu of certain amount of money or asset that they will contribute back to withhold the value. But that's a step-by-step introduction to digital currency. So that's how I see it. It need not be very dramatic in the beginning. It could be the same way. Just ease your current economic flow and money flow through the place where it's directly issued and through the place as it gets inserted into the rest of the economy.
Thank you. One question I have as well, because I'm still a student very much in this area as well, is Mark Carney came out saying there may be a chance to have some sort of more centralized global currency. Let's call it a Carney coin, whatever you'd like to call it. But do you think this is something that could happen in the future, where you have a central body like the Bank for International Settlements being the central bank of a global currency, like a Carney coin? Anyone want to take that on?
Let me share my view. I know, Philip, would you have a view on that? But think about, it's no different than a group of airlines come together and issue loyalty rewards, right? So you take One World or Star Alliance or anything, they have a loyalty point that is valid in same value across the different airlines from different countries that have come up. So all these government and countries would have to agree on that central value. But I think fundamentally that because of the value associated with a country's currency, which is different than any other country's currency, there has to be some exchange mechanism that reflects the economic prowess of those two countries to exchange equated value. And for that reason, it will be hard to come up with a single currency or a single coin. There could be multiple forms of digital currency issued by different countries, but then they will find the same way of exchange value to equate the economic prowess of each country.
Yes, well, Dr. Carney posited the SHC, the synthetic hegemonic currency, but I think that was largely for éclat rather than for practicality. I mean, you're back to the question of, do you envisage anybody powerful enough to run the global economy as a single unit? And that's not in my lifetime, I think, is the answer.
I'm just
Is that a
asking
question
about
to yourself, or?
yeah, to the panelists as well. How about the SDR that we already have the the baskets of units? Would that be possible?
But nobody gets paid in SDRs or settles in SDRs or uses SDRs as unit account unless they're a central bank, in which case you understand them, but the rest of us don't. I mean, if you look at the difficulties that the Eurozone is having in maintaining a single currency amongst disparate economies, try thinking doing that on what, 220 countries in the world at the moment. Just from a sheer currency perspective, never mind whether it's digital or not, I can't see it happening.
I suppose one testing ground could be if you have some sort of commodity price in SDRs and see if that was...
Well, because we used to have the gold standard. Currency was national fiat's currency was a substitute for physical gold. That's where it came from. And then governments cheated and said, well, we're no longer allowing you to